Hello and welcome to this preview video for the FOMC policy meeting on the 29th of July. The overwhelming expectations is for rates to remain at their current all-time lows, with Fed funds futures markets currently pricing in a 0% probability of a rate hike. As such, market focus will likely to be on any signals the Fed may give on the viability of a rate lift-off before the year end. Many investors have been focused on the September meeting as the most likely, given the presence of a post-meeting press conference by the Fed Chair Janet Yellen, which will give her a chance to alleviate any concerns the market may have of the rise in interest rates. Given that this is the final meeting between now and then, this is the last chance that the Fed may have to signal their intentions. Having said that, it's highly likely that the Fed will keep all options open, repeating that any meeting has the potential for rate liftoff and reiterating their data dependence. At the last meeting, the Fed said that risks to economic activity and the labour market remain relatively balanced. However, they did highlight potential risks from there being a failure to meet a deal between Greece and their creditors, as well as the slowdown seen in emerging markets, in particular the slowdown seen in China. With fears of Greece alleviated, at least for the short term, focus is likely to be on any comments they have on the turbulence seen in China and their equity markets. In terms of a market reaction, it's expected to be relatively mute on the rate decision itself, but with focus being on the path of interest rates and the timing of rate liftoff, the thing that will move prices will be any adjustments that the Fed have on the current economic situation and the progression of risks seen in China. As such, any hints of further anxiety from the Fed on the situation in China could push back the medium expectations for rate hike timing. As such, we may see a bid tone go through in equity and fixed income markets, with some curve flattening as well as some dollar weakness observed in the markets. On the flip side, however, any signal from the Fed that the current situation in the economy still warrants one or more rate hikes this year could see a downturn in both fixed income and equity markets, as well as some broad-based dollar strength. But anyway, that's enough from me, and we'll have to just wait and see what happens. Goodbye.